There we go. I'm JR, or John Robertson, from Ideal Financial Group. More markets equals more opportunity. Well, David's had some interesting calls recently, and it's been some really tough markets. We've had a really big bull run, then over the last few days we've had a big pullback, and then last night, especially in the international markets and even in Australia, a little bit of an up, down, round and round. Had some ordinary unemployment figures come out, so that might give the RBA a bit of direction, and we'll see what's going on. Really looking forward to tonight's Elliott Wave trading webinar. David's done lots of work over many years. I've known David for over a decade, and I've done webinars with him, and I've live traded for David. And David walks the walk and talks the talk. He knows the markets across different markets, which is very rare in this day and age. He knows not only equities, but he knows margin FX, he knows the CFDs, the exchange traded funds and options. Okay. Now, I'm JR, or John Robertson, from Ideal Professional. We're an Australian financial services licence, and we run the Ideal Professional platform. It's a great online platform. That the point of difference for the Ideal Professional platform is it's a global market from the one platform. Okay, so it gives you the ability to be able to trade the Profit Hunter Group orders. So when David recommends, the general recommends to buy, for instance, as an example, BHP here, you can trade that. But you can also trade, for instance, the other day, David had a sell in the E-mini S&P. That was the night the market had the big collapse. I think he also had a sell in the SPY, which was a very good trade. So that's September SPY. So
it was short at JR. It was short at 56.32 on the XJO.
Yeah,
and also short the S&P at 1960.
It was definitely short the E-mini. Yeah, fantastic. And that was the night of the biggest fall in the last, of my memory going back, is about at least 6 months. So yeah, short both those indices, international indices. So the Ideal Professional platform gives you the ability to place the order as a one order. So you can place your entry order, you can place the if done. So you can place your entry, and then you can place your profit target and your stop loss. Not so critical placing profit targets, especially in a bull market, right? But it is critical you keep that stop loss. David's been saying for many weeks, you want to keep those stop losses, tighten those stop losses, right? The market's in for a bit of a correction, and he was correct. So that's great picking from David and the Profit Hunter Group. Clients hopefully benefited from those calls. So just to recap, the Ideal Professional platform, ability to be able to trade global markets from the one platform, and it gives you the entry, gives you the entry, the profit targets and stop loss orders all from the one platform. It's fast and it's robust. About a couple of months ago, we had a massive day in the markets, and a lot of the other brokers' platforms collapsed in a great heap and stopped trading. Okay, that really puts you behind the eight ball, especially in a falling market when you want to get out. So you need that. Here's a bit of an example of a BHP trade just on the ASX. So just a vanilla stock trade, buying at $41, putting a profit target at $51, and a stop loss at $35. Okay. That's just an example for everyone to have a look at. So that shows you how easy it is to do that. Okay, just go back to that. It shows you also the order management, and it also shows you all the different tools that you can get. You've got a market scanner, you can do combinations, you can set alerts, you can use a spread trader, margin FX trader, you can look at your time and sales. Time and sales is really critical. You can see what volumes are flowing through. You can also see, one of the advantages, you can also see with your live data, you can see the bids, 4 bids down, 4 bids up. So say here in this example it's trading 41.98. You can see the bid, what it is at 41.97, 96, 95. Okay, so it really helps you to trade. So you can kind of work your little entries by just a little bit of fine tuning. Okay. One of the reasons why we've got this entry here at $41 is just as an example. Okay. Anyway, enough of me. I'm really looking forward to hearing what David's got to say about Elliott Wave and the timings. The markets are in interesting times at the moment. We've got some international influences coming through. We've got Australia doing really well and then kind of not doing really well. So we've got a lot of different opinions. Got a lot of people picking tops, a lot of people picking bottoms, a lot of people standing on the sidelines. Anyway, enough of me. More markets equals more opportunity. I'm John Robertson, or JR, from Ideal Financial Group. Give us a ring on toll free 1300 293 325. Just even if you've got a question about any of David's Profit Hunter Group trades. You might be long equities in your super fund. That's fine. You might want to broaden your horizons and start trading some of the other markets around the world. For instance, you might want to trade, say, Microsoft in the US, for instance, or David had a couple of trades on the Apple trades recently. Anyway, enough of me. I'm JR from Ideal Financial Group. Ability to be able to trade the Profit Hunter Group orders. Thanks, David. Thanks, guys. Have a great webinar.
Yeah. I'll just get my screens in order because they take a little while to buggerize around with, unfortunately, and we'll have just be a little bit of a second.
We can see the Elliott wave. We've got to put a D in that trading.
Yeah. I find it a lot easier to look at charts than to type. Yeah, people point out, they say, you're a scammer. You're a scammer because you don't know how to type, or your website has X. I go, hang on a sec.
All the big issues.
All the big issues, like any excuse. Anyway, I don't really mind that. That's okay. People are going to do their own stuff, aren't they? So what I do is just get started now, and I've got to become presenter, and this is me. So Kevin is saying I've got 1/4 of my screen black. What I suggest, Kevin, for you is that you actually reboot. Oh, new one is okay. Great. Thanks, Kevin. Okay, so warning, this business is dangerous, and I'm going to show you something that I was really upset about. I get upset too about things, and I thought I was trying to help people by putting articles in the Financial Review. Who's read some of my articles in the Financial Review? Raise your hands if you've seen me in Financial Review. Fantastic. Who's seen me in Sky, please? Your Money, Your Call. And I'd like to thank you all for coming along. I know you're probably missing out on Your Money, Your Call, or you've got one eye open on it, and hopefully there's somebody interesting on there. So if I get really boring, you can switch off and go somewhere else. But I hope not to be boring. I hope to teach you something. But why should I risk going to jail for doing what I do? This is the quote. A gentleman said, David Hunt should be put in jail for telling people to buy shares now. When was that, and who was that? That was Glenn Mumford, the chief editor of the Australian Financial Review. And it was the day after the AFR, basically the GFC stock market low in March 11th, 2009. So I don't think I'm muted, Tony. I think I'm totally, people can hear me. Everybody can hear me fine. So this time, this gentleman who was the editor, he'd put me in the paper telling people to buy, and I was one of the very few people to say it. And I hadn't been saying it for a long time. However, I had planned in November and talked about it in Toowoomba and to the ATAA in Toowoomba and Newcastle. Newcastle in early December I gave the timing, and in Toowoomba in January I gave the timing of when I thought the market would low. Now this gentleman obviously was an expert. The stock market went berserk after that. I felt really bad because, I thought, shit, I'm trying to help these people. Journalists only go with what is happening in the market and what everybody's saying. They don't like to say something different unless it's controversial, and if they pick it up and run with it aggressively, it's often wrong. So I was really pleased to get that working on that So what are we here to do? We're here to pick turning points, limit your risk, protect capital through Elliott Wave. Warning, I'm not sure if John went through the disclaimer, but this is issued by Ideal Financial Group Proprietary Limited, a corporate authorised representative number of Aruda Proprietary Limited, and the rep number, CAR number is 299753, based on AFSL license 338674 and Ades Trading Proprietary Limited. And this is general information not prepared for your specific investment objectives, financial situations or needs. I'd really love it if you make sure that you always trade with a stop loss. I spend a lot of time calculating stop losses for different trades that my Profit Hunter Group members make and their investments. So always have a stop. Even if you are an investor, you should have an exit point at which you believe that you want to recover your capital, or at least get back as much capital as you can if, say for example, the reject stock falls out of bed, or this other stock which brokers and other fundamental analysts have been recommending heavily, a stock like CSL. So basically trading is risky and it's your decision to trade. So if you want to ask a question or raise your hand, you can put it into the questions log, but please don't ask it until I tell you to, because it's actually quite annoying and I suffer from a little bit of attention. I like to answer questions and I go straight to answering the questions and it can disturb my flow. So I'd ask you to kindly not put up a question until I ask in the box. So what will you get in this? Now I've been lucky enough, and I really have been lucky enough, to make what I love doing my career. I have been able to trade since 1984 for myself, for my companies, for my fund managers, for my banks, for the banks I work for, and trade currencies and trade all sorts of things, and also do technical analysis. I started off as an economist. I used to train with John Hewson. He was my supervisor at uni for my economics honours degree. And I learned a lot about that. He became, if you don't know who John Hewson was, some probably won't, he went on to become chairman of Rabobank and a couple of other banks, and also was an advisor at that time to Prime Minister and Cabinet's office. He was the economic advisor there. He's a very busy man, and you've sometimes probably see him on Sky Business and a couple of other places. So what's in it for you? I want to teach you when to hold on and hold on tight, and when to fold, when to get out of markets that are running so well that you can't believe it and you made lots of money, or conversely, when to get out because it's not working properly. So we'll talk about those. And we'll learn to judge market strength and when to pass on a trade and discover what's useful for you. So it's all about you tonight. Well, it is in a way, because otherwise I want to thank you for actually spending your time here. There's probably a million other things you could do, having dinner with your wives and husbands, and you know, ladies have a busy day. I know you all work hard and do a lot more work than us men do. We're just sitting there trading or investing, and you look after families and mums and dads and grandchildren, and us blokes tend to sit down and go, well, it's the end of the day, I'm going to sit back and relax. So I'd like to ask a few questions about you. Are you an investor? I'd like to know if you can just in the box, just put in an I or investor. I'd also like to know, are you a trader? So I'd like to know which is an investor, which is a trader. There's a lot. Back in 2011, I said that 2011 was the year of the investor. And there are some traders and there are some investors here, and some of us are both. And so it's good to know who's who. people tend to wear a badge of being a trader or an investor. Over the years, I've catered for both investors and traders in my work. I have a report called the Self-Managed Super Funds Shares Bible, which comes out 3 times a week for those people who are investors, and that gives a longer term perspective and shows you what markets are going, where they're going, what stocks are going, and specific, covering about 10 to 20 stocks per day, per issue. And well, about ends up being about 38 pages. Would you like to see that? I might be able to show you that Windows 8 willing. If I might show you the latest one if you'd like that. And there will be a special offer later. If you are at this webinar, I will give you 1 month at 50% off as a trial to see how you like it, and you'll save $50 on that if you want to put up your hand for that. So do you also manage an SMSF? I'd love to know if that's the case. Do you manage an SMSF? Okay, quite a few people running an SMSF. Have you ever done an Elliott wave count is my next question. I know it's a specific question. There's a lot of SMS holders in here. Have you ever done an Elliott wave count? A few people have said tried. Don, hi, how are you? Rob, no. Adonis, no. Wes, no. Terry says never accurately. Thanks, Terry. A try. Yes, says Mark. Well, thank you. Yeah, so Elliott waved for 20 years, Stephen. Fantastic. And Stephen, yeah, I can see that in the way you carry yourself. You do have some background. Are you an advisor in the markets? Often I have people come onto my group, Profit Hunter group, and they sneak in under a Gmail account or a Hotmail account, and they're actually advisors giving advice to other people. There are some, and quite a few members who are advisors who are straight out, I'm here, this is what I'm giving to my customers. So it's the advisors that come to me. Now, they're not all advisors. They're probably, some people are fundamentalists, some people have research analysts, and they come along and they use my advice to work out where their shares can be. They use it as a filtering system. Some people have Stock Doctor, some people have Scaffold. Those stock scanning softwares for fundamental data, they use me as a filter to say, okay, this is a good stock, but is it ready to buy? So I filter out for a number of people, professionals, fund managers, self-managed super funds, what they can do with their stocks, and I give them risk management parameters. And I don't know if that's useful to you, but for the way that my professionals work, they find it very useful because it gives them an armor that protects their capital of their clients and their own when they're trading and investing, and gives them the potentials. In fundamental terms, I give valuations, and I also give risk reduction strategies. So are you a fund manager also? I'd like to know those sort of things too. So a few people, fund managers. Fantastic, thank you. And this is a gentleman who I know quite well now, and basically talking about his profits. I'm not going to mention them. I won't mention them, but this is a little bit of a while ago, and things can change, of course. But yeah, that's large amount of money that he made on his capital. We talk about the financial review. You've all seen that. You don't need to know that. Basically, picked the top of the market. There was another top of the market that I picked, and this is from Kat Davey. This is BHP. Now, I do pick tops in the market every so often, and I do it for my members. Now, my members are people that, particularly the gold and silver members, who pay me a fair amount of money, $7,500 a year in the terms of gold members, and $4,000 in the terms of silver members, to get my advice very quickly, so they can actually take some of these trades that I recommend. And I will show you, we did go short on the Australian Share Price Index futures, and I did it for a couple of reasons. And it was a little bit of a it was a really nice thing, and it was really nice taking that particular trade. Someone's, one second, there is something going on with my computer here. My password has changed in my computer. Anyway, we basically went short at 56. Where are we? On the XJO. I don't know if anyone's got that and they can put it up in the post that I've got, but we went short on the XJO on the day of the high, as JR was telling you. Forgive me, this little software program does funny things from time to time. One moment, please. There's a lost soul trying to get into the webinar, and it might actually be the fact that the room's full, as it does actually get filled up. Is there anybody actually here listening in on the webinar from on an Elliott on a telephone, on an Elliott wave phone? Goodness, I'm getting tongue-tied here. Okay, so this is the XJO, and this is where we got short at 56.32, which wasn't the exact top. Sadly, we didn't get the exact top, but we've had a very nice decline, and we're still short. We took a little bit of profit down at 54.39, and we're still short. We are still short the S&P for E-mini on our basis. One of the stocks that one of the markets we got interested in was the gold index, and we'll talk about that a little bit later on. We've been buying gold and gold stocks for the Profit Hunter Group, and it's one of the markets that I want to talk to you about today. What about me? Sorry to bore you with me. I discovered in Elliott Wave in 1988 while I was actively managing foreign exchange exposures for a large large semi-government authority, and I got to trade billions of dollars in the currencies. It was a lot of fun. I loved it. I got to sit there and learn all about charts, and I happened on Elliott Wave at that time, and I believe I won a book around about 1991 on Elliott Wave, or a series of books which I've been thumbing through for years. Luckily, I met somebody who was an Elliott Wave expert, a gentleman by the name of Bryce Gilmore, internationally respected, not known in Australia very well, however, one of the best in the world. He's now retired, he's semi-blind, very smart man. He taught me a lot about Elliott Wave and how to do things. He taught me about the meaning of a lot of numbers as well that you see in Elliott Wave calculations. I was also Deputy Treasurer Foreign Exchange for Qantas, which was at that time was the largest foreign exchange revenue, most diverse revenue source of currencies in Australia, and it was interesting and fun in those days. That was back when Qantas meant something. Proprietary trade at Macquarie Bank, that allowed me to trade whatever I wanted on the bank's money. That was a lot of fun, and yeah, it's a pleasure to be told that you're on $1 million a year bonus in in there. However, I also fund manager trading SPY bonds overlay for a bond portfolio manager for what is now Aberdeen Financial Investments. I've traded some of the best in the world. Larry Williams, who's turned $10,000 into $1.1 million in 1 year, trading to win the World Cup Championship. Jake Bernstein, who was one of the widestly published authors on trading in the world. The original Turtle, Russell Sands, who was trained by Richard Dennis. Van Tharp I've brought to Australia. All of these people I've brought to Australia and learnt from them and worked closely with them, watched them trade as well as teach. So I've been pretty lucky with that. Founding member of ATAA and APTA, past head of APTA and vice president of ATAA. So there's all of the credentials. Now this gentleman here, Jason, is a long-term PhD member. He now has backed off and he's actually taking the SMSF Shares Bible, as he's taking a longer-term view as he's had more children. Now he found that my work saved him a lot of time. So if you're spending a lot of time doing charts or trying to work out what to buy and sell, a 10-minute punching in of questions during the course of the day if you're a gold member of the Profit Hunters group, can save you a ton of trouble. I can say this stock's not worth it. Here's a stock. I'll talk quickly about a stock, and I wasn't meaning to talk about this, but I will. This is a stock called OzForex, and if you're a PhD member, you probably are sure that I have been very unkind to OzForex, and I'll show you some of my commentaries on OFX, and I'll just pull it on, I'll grab it off the screen. We have I jump around a bit because it depends on what's interesting to me. Now I'll pick up the OzForex stuff, and I haven't been kind to this, I must say. So what do we say back here? This is 25th of May, and these are picked out at random. Where is the bottom? We probably just saw it because it flushed it. Don't buy some here, and this is the last time that I told it to buy. Now it flushed out and tested the all-time low. Now I had been negative on that before, and I gave it a quick buy. Let's pick it up to, where was that date? That was June. Let's have a look at the middle of, this is my response. When you're in a PhD trade, I said OFX, the question from one of the portfolio managers at a large financial institution asked me, OFX, short-term, medium-term, long. I said short-term target, $2.65. Stop if shorting, $2.90. Big target $1.95 if damage can continue to happen. Now I'm not taking questions here yet. Please understand I'm not taking questions. Oh, hi Dawn, how are you? Good. So I've actually been negative on OFX for quite a while, but particularly from mid-June. Now this is OFX's chart, and we'll just go through a few little questions here. Now, this particular broker wanted to keep on buying it, and I've said sell a breakdown below $2.53 with a stop above $2.64. If already short, stop is at $2.71. So back over here, we've been just giving it a pounding from all the way down here, and I've been targeting those bigger targets on the downside. So OFX I've been unkind to, and most of the time I'm just saying go short. And here we go. This is a question today. And he's saying his questions was finally short, finally getting with the program. Yesterday's high showed signs of rejection from the wrong place to be long. Is also very weak in what was a strongest market. So if buying, buy a close above 250. So what I do is I give you the ability to, if you want to go long a stock that I think's wrong, I'll still give you your stop loss, even though I might think that the trend's down. I don't try and disturb people like that. But here, targeting longer term, $1.80, Short-term target $2.32. This is back on the day here, back at 7th. Oh, this is today's date. Where was this? 31st of July at $10.25 in the on 10.25. So here we can see back over on the 1st of July, which is, where are we? 1st of July. We're going short. We're looking down for targets down, and we've gone further than 232. It blew it right through. So OFX I haven't been kind to. Basically, all my report cards said could do better. I couldn't understand why schooling just didn't interest me, and I seriously spent most of my time in high school going surfing. But I was always scared about whether we'd lose our house. And my dad had this thing where he gambled, smoked and drank, and he was damaged because he'd been deaf in one ear and got scarlet fever and rubella and all those sort of childhood diseases, and was put in quarantine when he was a kid in the Coast Hospital and had his toys burned, and he was a very sad man. That he basically because he gambled a lot, there was always police knocking on the door wanting to take a house away. I also had a thing with a bit of ADHD and attention deficit focus, which some people think is, if I'm talking about this, then something's wrong with me, and that's great. If you don't want to be a member of the Profit Hunter group, and if you think that I can't help you because I may have slight ADD or ADHD, that's okay. Please don't become a member. If you can get over that sort of thing, you might get some benefits. I got chucked into a lower class every year, chucked out of high school maths and geography every week. It used to be, Hunt, Adele, get out. Because when I was there, there was another guy who became a rocket scientist for the Israeli army, the Israeli military establishment at least, and Mick Adele, and he and I were just ratbags. He was smart enough to get away with it. They loved him because he did well in his exams, whereas I tended not to. Basically, got chucked out of different things, and Houston saw me twice anyway, basically twice in the whole couple of years. So I'm not an academic. I can't talk to you about ream off numbers and all that sort of stuff that happened in the balance of payments and the balance of accounts, and I can't do that. I did an economics degree, but I found it boring as shit, really. Anyway, so basically I've worked for the Bureau of Census Statistics. I've also lost $10 million in trading in 6 months, and I can teach you how to do that very easily. 1989, $10 million in 6 months. I was lucky enough before that to have made something like 65 million, so I ended up net $55 million on the exposures that I was managing. So if you think that's a failure, losing $10 million, I can't help you in the markets, and so you're probably better off not listening to this webinar if you think that's a problem. Anyway, I'll get on to the real stuff. Here's my biggest fear: not being able to look after my boys and provide them with a great education, give them on ski trips. This one's scarpered off to Norway. I don't know why you spend your summer in Norway, but he says he swims for 45 minutes in the ocean there, and it's quite warm, and there is actually surf. So he met a Norwegian girl, and he's chasing Swedish girls all over the place. And there's my Azard, keeping her in a manner she deserves. She likes the finer things in life, Azard, and so that's one of my challenges. Anyway, so what is your biggest fear in trading? This is what I want to know. What is your biggest fear in trading? What is your biggest fear in investing? Please let me know. Some of our biggest fears are being wrong. Some of our biggest fears, and I'll help you here. Risk management is a fear. That's a good fear to have, David. I'm really pleased you have that. Not being successful. The question is how you define success. Having risk management, David, is an important thing. Losing more than making, that's true. One of my fears is getting a string of losses. I've had, probably in this room, I've had more losses in a row than most people. I've had 14 losses in a row, and Stephen says getting stopped out and then seeing the market take off. Now, Stephen, if you've been a member of the Profit Hunter group, you'll realize, I think you still are, but you'll realize that I have a back on your bike trade, which actually does take that next trade out. Adonis says getting out. Yes, Adonis, getting out is scary. We have profit management strategies that I give to PHG trade members to manage those things. And so they say to me, I'm long this, where do I get out? Adonis says getting out too early. Yes, that's why I also try and work those profit management strategies, which takes advantage of the trend while banking some cash at the right time. Next one is deciding to, Jenny, deciding which markets to trade in. Yes, that's difficult. It's really hard. There's 2,500 stocks out there in Australia alone, not to mention foreign exchange, commodities. Which ones do you pick the eyes out of? So for the PHG members, they come to me with a stock and I say, this one probably, but if you, or this one not, but if you're going to do it, here's your stop. So you at least manage your risk, finding the right stocks. I have a knack of picking the stocks that are in positions to change trend, and from then what I do is I wait for the conditions where they do change trend. For example, we went long BHP, surprising. That was against my view of what BHP should do, but we went long BHP. It did a really good run. We went long WPL. So 90% of traders and investors lose because they jump into the market with no idea. They have no clearly defined plan. They just simply they don't trust their own ability, which is disturbing, I know. After a while of doing this, you can not trust your own ability. So what I give is a plan. I get them to jump into the market with an idea, and with the ability to get out of trades that are not working, it improves your trust in yourself, and then you get some runs on the board. They make trading too complex. They don't understand money management. They misuse margin and leverage, and the brokerage industry or the CFD industry and foreign exchange industry is renowned for making people feel as if they're gods when they're trading large amounts and taking big leveraged leaps. I saw an ad for a person who said, I made $19,000 in 4 minutes. And I went, oh shit, I've got to have a look at this. I wonder how much position size they were putting on. And in the GBP USD, they were putting on $1,000 risk per point. So if you make 20 pips, which is nothing in the foreign exchange market, you made $20,000. Your stop, if you lost $20,000, his initial stop was a $20,000 risk. And so you can make 20 points in 4 minutes, but if you are over trading versus your capital, you lose $20,000. Most people cannot stand that. You've got to look at the capital at risk in terms of percentages. So misusing margin and leverage, confusing timeframes and trading strategies, not having a clearly defined exit strategy. Raise your hands if you have ever suffered from these. Averaging down. This is a classic, and I find the most dangerous. Averaging down is what number of professional advisors recommend, and I've seen them on television. That is the recipe for keeping a lot of stocks during a global financial crisis meltdown, and then spending the next 4 years hiding under the covers, not wanting to look at your stocks. Emotional and subjective trading, over-trading, operational errors, just simply fat fingers on your trading platform. I'm not going to play this, but these are one of the original Profit Hunter Group members. I can play that. You can probably see it on the website. I surf. I'm a lazy surfer. I live in Phillip Island, or lived in Phillip Island. I live in Bondi. We live in Bondi at the moment, and I've been surfing in cold water for a long time, and Bondi's starting to feel like cold water, so I'm thinking about going to Queensland. I like bigger waves because I'm pretty lazy. I like the way if you take off on a wave, they're usually not going to get, you're not going to get smashed by it. What you do, as long as you get down to the bottom or get a turn in, you get a good ride, and it takes you all the way to the beach, and then you paddle out. You haven't wasted your time on little shitty waves. So I like to try and go for the big moves, and I do that the same way. I trade. I'm a lazy trader. I don't often do day trading unless I'm completely bored. That's usually in summer, over January. But I like the big moves and trends, and because they go further, they go faster, and they help wash away their past mistakes. Trends are fantastic. Jenny is asked, what is averaging down? That may be the case, Stephen. That may well be the case. I wasn't going to say where I'm going, but you're quite right. Averaging down means if you bought a stock at $1 and it goes down to 50 cents, some people will say you should buy more at 50 cents and bring your average down to 75 cents. Trouble is, if it's great if it goes back up to $1 because you'll have started to make some money, but if it goes down to 10 cents, you get carted out in a wheelbarrow and hurt yourself. Anyway, what I use is a thing with a gentleman called Leonardo of Pisa. He was also called Fibonacci. Anyway, Leonardo of Pisa. He had these things which measured rabbit population growth, which used basically the Fibonacci series, or invented the Fibonacci series. Now, he pinched it from the Arabs, and they had the number series for growing rabbits, how populations of rabbits grow. And you can see here the numbers on this side: 1, 1, 2, across here 2, 3, 5, 8, 13. When you add all these numbers in this pyramid, you can see 35, 55. The next is 80, 89, and you can see that these numbers are 1 and 1 is 2, 2 and 1 is 3, 2 and 3 is 5, 3 and 5 is 8. So you're adding the number next to it to get the next number, and then adding it. It's called the geometric progression. And 55, 89, and we can go at 233, and we can keep on going for a long time, adding those up along the pyramid. The pyramid gets wider. So it's useful. And now R.N. Elliott wrote a book called Nature's Law, The Secret of the Universe by R.N. Elliott. And he calls it the major works of R.N. Elliott, which is pretty cool to read. Two gentlemen by the name of Frost and Prechter in the 1970s picked up the book, or 1980s, really 80s, picked up what Prechter did and then wrote about it. And many people make themselves famous by writing about what other people have done. I've seen quite a few people pick up books by that have dated back ages ago and come up with a concept that made them famous, and it was also because they used it. A.J. Frost and Robert Prechter. Prechter was a Mensa person, really smart dude, and a good marketer. So now he based it on waves, and he was an accountant in South American country for the American government, and basically he had time to think about wave structure and how waves were increasing and dropping in there. Will do, Steve. And basically waves, when they're building, are fantastic. They're called an impulse move. As the swell's building, you get smashed in the head quite often when you're paddling out, but you get the best waves when the swell's building. And the amount of waves coming in a set increases as the swell builds. And the number of waves in a set of waves, when the swell's dropping, tends to drop back down to being, instead of having 5 waves in a set, you drop back down to having 3 waves in a set, 2 waves in a set, and then back down to 1 wave in a set. And so Elliott came up with these theories based around these sort of numbers. Here's our building blocks of Elliott wave. Here's our basic tenets. Every wave is part of a larger wave set, which is a really useful thing, because if you don't know, and what I'm doing when I'm teaching my students, and I teach I do a thing called a trader green room coaching, after being tubed, and named after being tubed, which is a green room. If you're a surfer, you'll know what that means. If you don't, it's the fact that it goes all green when the wave comes over the top of you as you're traveling through the tube. So if you want to get clarity about where the market is in the current time frame that you're looking at, you can't see it. You look above in a higher time frame or below to get clarity, and that so you can work out where you are when you're confused. So it's a good thing to know. Now basically what I talk about is impulsive moves or trends. So the fast hard moves are the ones that you want to get on board, and the correction waves are the ones that you want to take advantage of, because we've just seen a correction in a commodity that we're taking advantage of, and we want to find out where a wave starts. And it basically starts when, if it's dropping down, that the buyers give up and the sellers just drop in and start selling and finishing. So the selling finishes, the buyers have given up previously, the sellers sell berserkly, and then suddenly something happens and it changes. So instead of the sellers being strong, somebody puts in a bid, and I've seen this before in the dollar Swiss, that the market's tanked in the dollar Swiss about 200 points in a night, and then everyone sold, and then one person puts a bid in for $3 million Swiss, and then nothing happens. He can't get filled, so he lifts the order by 3 points. Nothing happens. Nobody sells into him. He lifts the order by another 15 points to get done, and constantly raising. He doesn't get filled, and it rallies 50 points on no trading in the brokers, nothing at all, based on somebody who was short, desperate to get out, and there were no sellers left. That's when the markets change, Trent. Let's look at a classical Elliott wave pattern. We're getting into the crux of the biscuit right now. And in this Elliott wave pattern, if I can get my wonderful chart up, doesn't seem like it wants to do the business for me. Oh, here we go. I can see why. Technology is useful, isn't it? So we see here, let's assume that this is a market and its genesis, it started off at 0 or somewhere, and it rallies up in wave 1. And wave 1 gives us, hopefully these little fellas will work. No, it's not. They did say that they could change, but that won't do it. It starts over here and goes up in what's called wave 1. It tops at some stage and then moves and has a correction where it drops back and it goes to A, B, C, and it has a correction of a little wave down, a little corrective wave, a little wave up, a B wave, which we call it. And note these numbers. When the market is correcting, we call them letters. We label them with letters, an Elliott wave person. And when it's impulsive and going up and strong, we label it with numbers. So A, B, C. Notice that I put the arrow here at the top of wave 1. Now that's, once a market has topped somewhere and starts to correct, you should always watch those old tops to see if it can break out and be strong. Generally, the first thing we look for is a 3-wave correction, which you're seeing on this screen now. We also then, once A has finished and B has formed, we'd like to draw a line in there just to make sure that we know that once it breaks through the bottom of wave B on the upside, we can start buying and get back in if we don't get the bottom in there. At the next one, we see that A, B, C, by the time it turns around, our wave 2, which is a corrective wave completed in C waves, so we get A, B, C. Once A, B, C is there and it breaks back through A, the bottom of A, we can label this wave 2. Generally, wave 2s retrace 61.8% or the golden mean of wave 1. So it retraces 61.8 of this leg. And generally, first thing you look for is 3 waves in that corrective wave. The next wave is one that we're really looking for, and that's called wave 3. So we have wave 3, wave 2, A, B, C, breaking to the top side above B, A is great. If you can get in on around the 61.8%, if it goes too far, more than 80%, and you've probably got something else on your hands. But if you're looking for an impulsive move, wave 3 is the best. It will generally go 1.618, 2.618 of this range of wave 1. So what Elliott wave does, I'm giving you numbers you may not have heard of, but what Elliott wave does is it gives you the ability to project where the market is going under certain conditions. People say, who are fundamentalists, say, this is all bullshit, you just make it up. I ask you, what does a person say when they say, I'm going to project forward what these earnings are in this market based on what I've seen in the past? When they're using fundamental data, they're still talking shit, really. They're making projections, they're making assumptions. Their assumptions are often within an okay direction, but things change. And what happens even if sentiment shifts and this company can still be making money, but if nobody wants stocks and they're selling them, that company still goes down, or can often go down. So we get a big wave 3. Wave 1, the top of wave 1 is where most fund managers and economists start buying. The end of wave C is where the smarter people can get in at, if they're Elliott wave people, and you get bit of risk reward. The downside is 40% of the time this will work, 60% of the time that won't work. The great thing about that is you can put your stop loss on and have it tight, and you get this big break. And you can also, if you miss out, buy with A with a stop below C, and then when you get up above wave 1, if you're not already in or you want to add, you can buy the break up with a stop below B, the top of B, on a close only basis. And that in a nutshell is the best thing that you can look for in trading, that wave 3. Up the top of wave 3, I'll tell you the sentiment at the bottom of wave C. Everyone thinks it's going lower, they're all depressed, the news will be really bad, and all the journalists and all of the brokers, with a few exceptions, will be telling you to sell, all the research analysts. Wave 3, and that was I won't talk about the resources analyst at a particular stockbroker that that one of my clients is at. He says he's the worst analyst in the world. Anyway, wave 3 is the best one. This is impulsive. It has wave gaps. Now, next one. Top of wave 3. Everybody's making money. Everyone's partying. Everyone's saying how good they have and what a great run. All of the news is positive. Everybody's into shares if they're trading shares, or they're into gold if they're trading gold. I can tell you the top of wave 3, I picked and I went on at what was it called? It's called the Traders Network in the States, and I said gold's topping right here in February. I actually I was within 1 hour of that top. I said gold's topping right here, right now. It was the top of a wave 3. Why? Because wave 3 collapsed, and then it comes back. Everybody's long up here. I got a bit of that 2 weeks ago. Everybody was telling me how this market was not going down. That's why we sold it. What happens is when everybody's bought it, it can just pull back down because there's profit taking. The people who have been long here start to take some profit or raise their stops up because they don't want to give up the money, and the market comes back down in what is called an A wave. A wave, and we start forming A, B, C, and if this area has been A, B, C, we start to go A, B, C, D, E and get more complex, because impulsive waves are 5-wave structures. Corrective waves are either 3 waves or 5-wave structures. And so we get an A, B, C pattern. One of the most common patterns is that of a triangle. A, B, C, D, E. See that triangle drawn in? If you see a triangle, it is one of the most statistically significant patterns that you will find, depending on what its shape is. We see the market break out and move up in a 5th wave. Now we can do some really cool things. When we're looking at a breakout on wave 4, wave 5 is the length of wave 1 projected from the end of wave 4. So that gives us an idea that wave 5, the next move up, which is the last move that we would expect generally, should move above the top of wave 3, get up above wave 5. By that time, everyone's so convinced it's going higher, we can buy it on a breakout above that triangle, put stop in the midpoint or a little bit below the end of point E, and this E should be sitting there. I'm sorry, you probably picked that up. One of the great things about Elliott wave, as I said before, down here is 61.8% retracement. Up here, when we're correcting wave 3, there are so many people buying and selling and confusion, and all these people that have missed the boat from down here, they're all trying to buy, market comes back up, and then there's a buying pressure to the top side. This is a battle of wits between the buyers and sellers in wave 4. That's why it becomes what is called a contracting triangle, and then it breaks up. This is the highest percentage trade that you will get in Elliott wave. It's not the greatest return, but it is the highest probability of making you money. Has about a 70% chance of making you money. So it's a bread and butter trade, they call it. Now let's have a look. That's where wave 5 completes. So we see wave 1, wave 3, wave 5. Wave 3 should never be the shortest. You'll see this in notes a bit later. Now let's look at a practical example. We can see here. Okay, I see what's going on here. I just need to correct my computer a little bit because it's done something that it really shouldn't have done. And I have to just jiggle around a little bit. Now what we can see here is this same pattern, and we'll bring it forward quickly and we'll just overlay it on this chart, and I'm hoping it will show up a bit quicker than where I fumble around. And you can see here the similar stock that I was just showing you. It's not doing it. Not doing it. Anyway, this pattern, if you can blur your eyes and have a look at the pattern that I'm just about to show you, you can see this being a wave like a wave 1, 2, 3, 4, 5. This formed a bit of a triangle. It's not a perfect triangle. This is wave 5, and this is A, B, C, A, B, C, 1, 2, and this wave 3 subdivides into 5-wave structures, 1, 2, 3, 4, 5. Then we get a correction that is more complex. You can see 5-wave structure in this, not quite a perfect triangle, but has anybody guess what that is? Now, Andrew is saying, is this ADJ, which has just completed a nice 5 waves up, says Andrew. I'm going to show you that in a second. What retracement is the A wave from wave 3? There aren't any great rules. Francois is saying, it looks exactly like the ASX 200 monthly. It may do, but it's not. ACR. Is this ACR? No, it's not, Sri. Sorry. You close, no cigar. It is, of course, integrated research. And you can see the bar that happened today. This is unusual, but I wanted to show you it because what was probably happening here, and this does happen, we talk about the moves. This wave here, you can see the big bar down on huge volume. This is a 5-wave structure, but notice that these 2 waves here, at least those waves here, are fairly equal, which means those equalities, you could see this as a big B wave here, an A wave here, and a C wave here, and then there's this impulsive decline based on bad news. That's a higher level of thinking, but you can see what I mean by when markets, if you're confused, you can go up and down to have a look at it. The higher time frame, that's an ABC correction, even though this has the gaps. This has a 4th waves. You see the triangle in here. It's a bit of, not exactly the best triangle I've seen. We see wave 2s and nice gaps, and wave 5s, there's probably a 5-wave structure in here. If we go into a lower level, we can see a wave 4 there. Certainly it cracked. That's a fun one. Now, Francois, with your permission, I want to show you something that one of the members here who's been, he says, based on my big picture long-term forecast, I went 100% shares to cash in my super at the end of April. In fact, on the day it made the high, 29th of April. Now, my forecast at the Profit Hunter Group forecasting webinars, if you want to be a bronze member, you can attend those. They're every 2 weeks. The next one will be on Monday night. I went long Australian shares, and so he sold out on the top, 100% into cash, the 29th of April on the high day. And I went long ASX shares, thank you, Francois, and in my super 100% on 1st of July, based on my forecast. I have followed your long-term views and big picture trends in my super last year, this super, and so far looking great. Thank you, as always, for your great insights, calm and accurate assessments of the market, moods, trends, timeframes, and probabilities, because that's what I do. So here's the tendency of Elliott wave. All waves of similar degree will relate in time and price amplitude. I can't teach you that tonight. I do that with my individual coaching people. And for my gold members, they get to see why I'm talking about things as well, and I give the reasons. So gold and silver members get to see that. Impulsive moves follow corrections, and they are ebb and flow. How do you get to be coached by me? You need to have been a Profit Hunter Group member for a while, or a very experienced trader and investor. It is something that costs a fair amount of money, Jenny. But I really, I do put a lot of effort in it. The program lasts for 6 months, and I only take 1 or 2 people at any time. At the moment, I have my coaching client at the moment, a Traders Green Room member, and I'm pretty good with that amount of work at the moment. There's a few things on my plate. So impulse. The other thing is that impulse moves follow corrections, ebb and flow. So you make the most from impulsive moves. What are we looking? So why do we make money? Why do you think we make money from the impulsive moves? Why do you think they make the most money? We'll reference it back to this chart here. This chart here, we can see in this move, basically it lasted about 3 days, and you made, if I'm not wrong, you made, if you bought the breakout here, you made between $1.03 and $1.15, for example, if you stopped out here. And so that's about a 10% return in the space of 4 or 5 days. That's great money. If you can do, you know, a little bit of 10% here, a little bit of 10% there, and certainly starts to add up to some real money. So that's what you're looking for. These little corrections, you can sit in this correction, you can be buying here and buying here and buying here and buying here, or you could sell up there, and you're doing all this work. In this move, this is a corrective style wave with a B wave in here when you look at this. So there's a B wave. So possibly a fourth, but you can call it a B wave. All that time you're going sideways, wasting your time. Why not try and latch onto these ones and go when it's breaking out and having a lot of fun? It's a lot more fun to be in a running market than being a dead boring one. I hope you'll agree. So there's the tenet. So impulse moves follows corrections. So the trick is to find out when you're in a correction and when you can start to get an impulsive move. So when you're looking to trade one type of wave, it's easier for you to look for that preceding wave type. Now, so we talked about the 5 wave structures. We talked about the labeling. This is just a review. We talked about corrective waves, which have either 3 waves in a set, a simple ABC for wave 1, 2, or 4, or 5 waves, which is A, B, C, D, E. So let's have a look at the rules. All waves, wave 1 and 5 tend to be equal in length. So we want to make sure that we want to see if we can see that these waves are coming in, that the lengths of these waves give you the opportunity. You get that there, we get a correction, and then we're looking for things to project forward. And let's give me a chart. Give me a stock. Let's do gold. Let's do gold. And I'll do it on a different chart than this because I'm looking at a slightly different time frame to what this chart is doing. And I'll do it on a chart here. Let's do some wave structures on gold. We might even do National Australia Bank. Let's do National Australia Bank on the monthly charts. Now, posit this. We have impulsive move this way, which is the global financial crisis. We have a 3-wave structure to the upside, which is a wave A, for example. We have a wave B on the downside. And we have the ability to do some projections from the top of wave B and here and project upwards. We can see that this movement is actually where A equals C at $36.16, and the top in National Australia Bank was $37.07. Now, we have had quantitative easing. We have had all sorts of people telling us that it's fantastic to be buying banks and dividends and all that sort of stuff. Personally, I think National Australia Bank is the worst bank, and this is one of the stocks I was telling people to sell because it was reaching the top of the triangle up around that $35.40 area. We could see that it was getting up there, so I said basically I'd been telling people to buy it, and I turned around and told people to sell it up there. What we can see here is if we are dropping down into lower time frames, we can see these 5-wave structures in a C wave. So this would be a C wave. Now, a C wave tends to be something that is projectable also, and if we're projecting a wave 5, say this was wave 1 and this area here was wave 4 and this was wave 5, we'd be projecting up on a 1-to-1 basis up towards $34.45, and it went a little bit further. So this is the sort of area where you'd be thinking that this market would be topping out on National Australia Bank, and you can see today it keeps on having a sad and sorry tail. Now, we might look for some other projections, and as I say, we're thinking of this as being a C wave. Now, we drop this up here, We take a projection from up around here. Let's see where it goes to, and we can see that this area here, the other target for wave 5s of wave 1s, and it's a rare target, is 38.618. And you can see here the $35.45 was a topping area there. And I've assumed this is a bit of a fourth wave at the end of there. There might be a better way of doing it. I might be able to bring that back down. But close to that area, lots of reasons to not be happy about National Australia Bank or see the market dropping down. Let's have a look at gold, which I promised you. Is anyone interested in gold, or are you all given up on it? Do you all hate it now? Who likes gold? I didn't want to talk about gold in this, but I ended up doing it. I normally am pretty good at picking gold, as you know. We've had those Elliott Wave webinars quite a lot, and showing gold webinars. That's and I need to fatten these bars up. I don't want to show you just the. I'm going to show you the GC3 contract. Now, when we're looking at gold on the Elliott wave count, I've been saying that I wanted to see gold go down, but my target has been around about the 1270, 1280 area. Now, we are long on a Profit Hunter Group trade buying gold, and I've been telling people to buy gold shares, particularly a couple of the stronger gold shares, which we'll have a look in the Profit Hunter Group trade thingies. We can see here, let's say that this is some sort of wave 1 up there, or wave 1 here. It's a bit nebulous, and I'll grant you that, but I'm just trying to take some targets here, and we can see a wave 1 projection would yield a target at 1333, which you could see over here. So this is possibly a B wave. If we bring that back across here, you may not get what I'm saying. Some of you more experienced people will understand what I'm talking about here. Elliott wave is not perfect, but it's a bloody good sight better than most things use. You can see it uses projections. 1-to-1 is the usual one. 0.618 is the next usual one, and 1.618 of wave 1 is also the next one. So we can do some projections and end up with some targets. This is, say this is the top of the 5th wave, and we did an A, B, C and a regular C pattern. What we're looking now is this wave is falling all over itself. Notice this wave's up, this set of 5s has been impulsive. Then we get an A, B, a choppy C wave, and it's starting to break up again on higher volume. I hope you can all see that. One of the reasons I got excited and got my Profit Hunter Group members to buy down at 1286 was for this reason, that it's actually overlapping, and we're seeing this start to go up. I could see all of the people wanting to start to sell gold, and it started to break up. We got an impulsive move last night. It's early days yet. What we can say is if it breaks 1270, it will make new lows. So what I say is I've got 2 probabilities in my mind and 2 scenarios that I'm working to. One I want to see, and I think gold can go up to $1,396. That's the area that I would expect it to go up to. Why can we expect that? Well, there's some projections up there, really. That's the simplest way I can explain it to you. I've just explained some of those projections previously, but up to 1387, that sort of area, 1390, and certainly 1350 on the top side for gold for a double retest. Is that okay? One of the stocks that I've been interested in particularly has been North Star, and we've been buying North Star for the Profit Hunter Group, and you can see quite clearly a 4th wave pattern in this. It's coming into the 5th wave, and all of the rules I just told you, this is live, this is up to today's trading. We've been buying it and wanting to go higher. It has been in this triangle of churning. We can see it going higher on volume, and it's a beautiful thing. Wave 1, say a 2, a 3, a 4, and inside this we get wave 1, 2, 3, 4, 5. Beautiful thing. So NST is in the last legs of its move up, probably. At least we know what we're doing, and we're long, and we can, as a Profit Hunter Group trade member, we can raise our stop to $1.72 stop close only. There's a practical example. Are you seeing this? Is everyone seeing this clearly? This is a practical example of Elliott wave in action. This is the sort of mentality that I do all day. I haven't just plucked this out. We've been watching this live and is as evidenced in the PHG. Can I have some response here? I'm sort of a little bit groping in the dark as to whether you're getting this. Few hands are going up. Fantastic. So we'll go and have a look at for NST. See if we can pick it up there. Okay, great. So we had a PHG trade exit back over in April. We'd been buying NST. It was a fantastic move. Let's look at the PHG trades list. And this is the ASX one. This is the one from yesterday. Now gold and silver members get this. Where are we? Newcrest, we've been waiting to buy on a break up above $10.95. That was executed today. Now where's NST? There's NST. We've been looking to buy a break above $1.78 with a stop at $1.59. Okay. I'm trying, Gary. So we've been looking for a buy and a break up on this. We had another PHG trade which was working nicely. It was something we were looking for. So NST, we see it's broken up today. We've gone long. Stop loss, we were searching for a little bit lower down. We didn't quite get the lower target, and we've gone with the break up. So happy to go long with gold. So you can see here, nice break up. On the PHG trades on stop at $1.59, stop close only. On the PHG trades here, I'll just show you the commodities trade. And this gets, as I say, published for gold and silver members. We trade all sorts of commodities and stuff too. We've been long the US dollar index since 79.84. Currently our stop is at 81.31. We have some trades. We've just sort of been buying a little bit of grains. We've been short silver. This has been fascinating to me. We've been short silver on a breakdown of 2084, but gold is the only one that has been rallying. So palladium, silver have been coming off. We're short silver with a stop at $20.45. A short silver and long gold. Like, how does that work? Copper's backing off to, it's a strange one. Anyway, we went long at 1286.3. We've bought some more on a break above 1298.5. Stop is at 1283 now, and we've entered those times from the 1st of August. Okay, so we've been keen on gold for a little while. It's been one of our preferred ones during the disaster, or during the recent little disasters. Just to show you, and we do it on a pretty one. This is the thing that I edit and I look at so I can edit it. This is the current PHG trades on the mini short on short at 1370. We were going to sell the 2010. That didn't happen. So we sold a breakdown of 1960. And if you don't know the E-mini chart, I'll show you this one. We'll see what it is doing tonight. We got short on the PHG for the international areas. We got short here. I would have liked to have been up there, but we got short here on a breakdown below 1960. It scared us for about 12 hours, and then it rushed down. So We're looking for 1888 on the downside, and you can see here quite clearly 1, 2, 3, 4, 5. So we're in that zone where we think it should actually start to correct in Elliott wave terms. Again, wave 1, 2, 3, 4, 5, ABC, big fourth wave, final fifth wave behavior, and then it started to fall. And I do tend to move it around. Okay, so we traded other things like GDX, which we bought last night on a breakup. We do a whole lot of things, to ETFs and all that sort of stuff. Let's get going with the rest of the presentation, because I'm sure we're coming to the end of it. So wave 1 and 5 tend to be equal in length. If they're not, then look for 0.618. That would be a failure. Or 1.618, that's called an extension. I'm giving you a little bit of more detail because I know there's quite a few people in here who have been watching these webinars previously, so a little bit more detail, you'll learn a little bit more. Wave 2 will only retrace part of wave 1. That's a guiding rule. Wave 3 should not be the shortest wave versus wave 1 and 5. So if you have a little wave 3 and both wave 1 and both wave 5 are longer than it, then you have not counted the waves properly. Wave 4 cannot overlap wave 1 range on close prices. And I'm going to run through these a little bit quickly. Wave 1 and 5 tend to be equal in length. We've talked about that ad infinitum. And wave 5s can sometimes extend more than expected. And wave 2 and 4 are actually corrections with an impulse wave, and they will subdivide into waves that we will label with letters because they're corrections. There's another profit owner group member, the original one, Ern, has been a member since 2009, and he's now doing Asian chart. Basically, the markets are a puzzle, and I try and fit together the puzzle. You will never, and I will never, get everything 100% perfect. What I do for my members and myself is when things go wrong, we get out so we can come back in, and then we use profit objectives so that we bank some profit, but we also minimize our risk and put stop losses on, and don't assume we're going to be right, because we can always get back in the market. Maybe you have to get back in where you're not in the exact, you might be 2 cents out on a stock. You might have lost 2 cents, or you might have lost $100, or you lost $500. If it's the right trade, you can get back in and work out the puzzle. So that's what I do for my members each day. Now I want to show you a little thing about the Share Markets Bible. And we're just playing around with the graphics for this. This is here we go. And the Australian Shares Report, it's called. It is also termed the Self-Managed Super Funds Manager Charting Guide to Investing in Australian Shares. The objective is to make it better decisions, which shares to buy, which to sell, and which to maximize profit for and minimize losses. It is normally $147 per month. You will receive as a member, and I'm not sure I can do this. I'm certainly going to have a try at this to pull it up on the screen for you to show you the last one. We have something like 130 odd pages. I can't show you this. It will not do it. Just one second. See if I can grab it on this. This will work, I think. No, it's not showing it because it's in version 8. Anyway, if you'd like to get this, then simply send an email to the following. You'll get 50% off the price of this. It'll be, actually, I'll make it $47. Sorry, yeah, $48.50. If you send that and you say link for ordering monthly Australian shares report, saving $100 or $99 technically, $98. If you send me an email to that, we'll get you set up, send you a link out. You'll save $98 on your first month. So here's the key. The corrections are really the keys to us, whether we make money or lose money in the markets. Why is that? Because it's basically, the corrections are the things that we can get us confused. Adonis is saying it's a good report. Thank you. Thank you, Adonis. And it concentrates on medium-term to long-term trading and long-term investing. So if you are doing that, we review the banks almost every day in the 3 reports. It is in a, Andrew, I'll get to your questions in a second, but I haven't yet completed it. And the banks, we cover the materials, we cover the major indexes, and we cover about 10 to 20 stocks each issue. We do them in depth, you get the charts, etc. So corrections are the key to making money, basically. They're the money-making key, because the money-making key is, we've got to change this. Beautiful. The money-making key is, if you can find a pattern like this ABC pattern that we see in gold, and then get on board when it gets impulsive, as it did last night, it got impulsive, then we should expect up towards 1350 on those side. Jenny is a member, as a subscriber. She says she likes it because it's very easy to follow and the charts are easy to follow with your comments. Well, thank you. Okay, so these are the patterns we look for, and I'm going to tell you the ones we talked about. The horizontal triangle, that's what we saw in the 4th waves. The zigzags are what we saw normally. So these are the 2 that I normally look for. I'm never looking for this. I'm never looking for that. I'm occasionally looking for this. That's how I picked the top in 2010 to the tick. It was 1 tick out. We sold the SPY at 50.36. The high was 50.37. And we did it live for gold members on the Profit Hunter group. It was a pretty cool trade, that one. I really remember that well, because the guy at the Financial Review, after I finished the webinar, he rang me up and said, my customers, our readers want to know what you think of the market. I said, we just sold it. That was the top. And he put it in the paper. Anyway, the flat correction, I look for that. I look for this about 5% of the time. It's unusual. This is about 10% of the time, a flat. I look for this about 50% of the time, and this about 40% of the time. So the stats might not work out. You might talk about 45% over here if you want to be technically correct and beautiful with everything. I ignore these 333s and that sort of stuff. So ASX, we have seen plenty of stocks with triangle, and this is National Australia Bank. The trick with this one is it should come back down to the bottom end of the triangle. The trouble is, if it breaks down by the bottom end of the triangle, it could go further. So watch this one. It's still Australia's worst bank. If it gets above that $36 area, then it's all good for higher, but at the moment, top end of the triangle. We won't talk about the S&P cash index. I did talk about an irregular B wave. This was an irregular B wave, and it was an expanding triangle, and that's why I said on the 21st of April, I think it was We actually told them on the day of the high at 56. Was it? Yeah, 50.36. We got it shorted at. So, are you a self-managed super fund manager? If you are, this SMS is something to do. I reiterate the ordering for that. I'll send you the link afterwards when you get that. Keys is there. Not really a nice guy. Still a Profit Hunter Group member after, it's 5 years of Profit Hunter Group membership. So remember, corrective waves have either 3 waves, ABC, 5 waves, complex, ABCDE. We have a classic 3-wave ABC pattern here. Notice this little chart here. It goes A, B, C. We see the triangle in there. Keep looking for those triangles. I'm going to start running it through. I'll ask you the question, is your current advisor a dinosaur? And I believe that all of the tools are useful at different times. There are times when you should be a fundamental investor. There are times when you should be a technical investor and a technical trader. Simply being a fundamentalist has worked ever since I said buy and hold will work back in 2011. That was part of my forecast for 2011. Buy and hold will work. And 2012. It's going to be tougher over the next couple of months. And if you pay attention to my forecasts, as Francois does, become a bronze member, you're looking at $197 per month for that. You can go onto the website at s.com.au and pick it up. And you can also go to this link if you want to become a member. Or simply go to ades.com. No, wrong one. Sorry, I gave you the wrong link. That's for that's if you want to go and join up for the Australian Shares Report. But if you want to go to and join up to be a, sorry, I should have not have typed this. You want to be a Profit Hunter Group member, bronze, silver and gold and above, go to profithunters.com.au and you can see the membership categories there, or you can go straight and order off that link. So if your advisor is just saying, I'm always right, you want to follow him when it's a bull market. And he says, buy and hold, buy and hold. You want to follow him when it's a bull market? Absolutely do it. Get the dinosaurs out and use the dinosaurs at that time, because they will make money in a bull market and you will make money with them. The trick is, once the music stops playing, and the music has pretty well stopped playing in a number of markets, you need to trade differently. So if you've been missing out on that, then start thinking about a Profit Hunter Group membership, or at least the Australian Shares Report. We talked about fourth waves, A, B, C, D, E. That's a classical one. That's actual one. Fourth wave triangles. Let's get going. Fourth wave, everyone's bullish. 50% are bullish, 50% are bearish, and 38.2. And this is my old family Bible. And if you know the irony in this, it is the Page family Bible. And if you've ever seen me on with Andrew Page, you'll know I can't get a word in edgewise because I don't say that much. And I think it's pretty funny that he shares my mother's maiden name. Anyway, or my family name. Now, we do have a special offer, and it is, and you're going to need to write this down. I open up gold membership only every so often. I am looking for 3 members of gold. Normally it's $7,500. Tonight, as long as you get your request to me and a request for an interview with me, personal interview, you send me an email. I'll send an email to sales@ades.com.au. We will interview you and see if you're a good fit. There's a questionnaire and you need to fill out an application form. why I do this is because my members are professional. The gold members are professional. And from what they ask me and what I do for them, the information flows down to the silver members as well. So we do by application. You'll save $2,500 if you're accepted. And I won't accept just anybody. You need to have some experience in the markets. If you're a beginner, please don't start off here. I'd prefer you started off with doing the newsletter, the ASX shares report, and that you can build up your knowledge that way or become a silver member. So $5,000 you need to apply tonight, and by 5 o'clock tomorrow we'll do the interview process. I will only be selecting 3 people. The other reason for that is some members of, so you know, I can get asked up to 20 or 30 stocks during the course of the day and during what is called the webinars. So if you look at the membership on the Profit Hunters Group website, you'll see that our markets, I cover a lot of markets, so I can't answer the questions that everybody has. So I limit it. I can do about 50 stocks in a day. Here's a stock that we've been shorting. This is a stock we've been shorting, and this is called CSL. Did anybody see me talk about this on Sky over at this high and around this high? And we've been shorting it on the downside, looking for $55, more likely $62 very easily. So those are the sort of things that we do for the PHG members. And where's that? Yeah, I won't pull that out. We haven't got time. So to make a saving of $2,500, become a gold member and get access to be able to ask me questions on any stock that you want, any time of the day, including commodities, foreign exchange, world indices, US shares, UK shares, international shares, whatever you want to do and trade foreign exchange. If you're a trader, the gold package is the best. If you're interested in the ASX only, the normal price for that package is $5,000 for the gold membership. Tonight I will give that to you for $4,000. It also requires an application. So again, you can send that to sales@adesk.com.au, or you can call 1300 552 182 after 11 a.m. tomorrow, and we can discuss and do an interview. Okay, so we can go on for that. So that was the special offer, and as I said, ASX Gold membership, $4,000. Well, actually, let's make it $3,997 because that's a better number. Thanks, Francois. So let's go on. So if you are basically, Elliott Wave gets you to go with the flow. You don't need to forecast. It is a good about to have projections. In the mines, you've got probabilities, and when the market changes, you can actually turn around and go, "This is good." It's about the trading and how you manage your risks and your entries and your targets. And you also need to watch the corrections and hang on for the impulsive moves, because the corrections are like the eddies and the impulsive moves are like the waterfalls. So waterfalls very quickly and it eddies for a long time. Same thing in the markets. So we want to hang on for impulsive moves and always trade with a stop loss. And I understand that it gives you, Elliott Wave gives you structure in trades even when you are wrong. And we can see triangle. If you notice that the Shanghai A shares index, I put in this almost a couple of years ago. It's still been living inside the triangle here. In fact, it's down here as a part of the triangle. It's formed a different triangle. What I want to know is, can you do all this Elliott Wave in your head? If you can, and you're doing it well, you don't need me. However, Elliott Wave is not the sole part of my arsenal. If you can do it in your head, then you've got to think about where to put your stop losses on and then put your structure on. So who can do this in their head and who can't? So the good thing about Elliott Wave, it gives you price objectives. We've talked about this. 38.2, wave 5 targets, wave 4 ends, wave 1 length. Wave 2 often retraces 50 to 70% of wave 1 with a tendency to 61.8. Wave 3 tends to be 162 or 1.62 times or the wave length of wave 1 from wave 2. That gives you good risk-reward ratios and know where to get out in your potential price objectives. If you need more information, we've talked about the Profit Hunter Group. Profit Hunter Group, we do webinars during the course of the day in the morning, so you get set up for your trading. We take live trades when they're set up every so often. Some of them are spectacular. Some of them we do get stopped out of. The spectacular ones are just the best, and they're worth much more than the small stop losses that we put on at that time. So I've talked about the Profit Hunter Group a little bit, but I'd like your permission because the Profit Hunter Group is about how the gold members interact as well, because gold members come to me with things their customers and stocks their customers and foreign exchange trades their customers want to take. They come to me with ones that they want to do for their own funds. Financial planners come to me with what they might do for their financial planning clients and ask the questions. So it is very flexible with gold. It is, you can ask me a question on any stock, anything you want. So where are you now in your trading? Have you ever got into a trade that you shouldn't have? Please raise your hand. Have you ever gotten confused as to the direction of the market or been stumped as to where to put a stop loss on? Now be honest, type in yes or no. And if you haven't been, then you don't need me. If you have been, you do need me. And I'm going to answer a couple of the questions here, and I suggest you become a Profit Hunter Group member there, Rob, if you get confused. Even the professionals come to me for this because sometimes it just is plain confusing, and I hold their hands as they trade and invest. Now, Andrew, ADJ has asked, is it in wave 2? Now, I'm going to have a quick look at this on a, is it on wave 2 from, answer is possibly. This is the way that I see it. I'd prefer to look at on a, because this actually doesn't trade so well, such a digital trader. When I drop back into a higher time frame, we can see a very deep retracement with an A, B, C, which is good. So I would say when you ask about April, I would think this may well be a wave 2 to the downside or a B wave, in which case when we look up here, this is probably a fourth wave of some sort or a B wave, in which case your projection is going higher, Andrew, towards 16 or possibly even around the 20-cent mark. So the way to trade this is to buy a break above 12 cents with a stop loss below 10 cents targeting 16.3. So when you talk about this sort of movement, this is possibly more likely wave 4, and you've got a different management strategy that you need to take. Are you happy with that, Andrew? MML, Medusa. Medusa, is it all over for this stock? Now, Medusa, we can think and dream about this as an ABC pattern with a bit of a culmination. The best way to trade this is to leave it alone or have a nibble at it around here with a stop below $1.10 if you're really that keen on it. I wouldn't be doing it. But best to wait for a break above 1.63. We might be getting an ABC pattern here if this volume wasn't so cataclysmic. There's a few people giving it up, so a nice break back up through $1.61 would be the safest way to trade that with a stop below $1.40. And again here, the shorter term stuff's locking in a little bit. What I'd say the most likely scenario is we've got wave 1, and this is the daily chart. Remember, this is a different time frame. Wave 1, 2, 3, probably doing a wave 4, which could lead it back into temptation at $1.50, $1.53. We see a hard volume hit down. This is called capitulation into this. Usually get a rally up to here, maybe a little bit lower, maybe it pops through it, but watch this area, that zone in here, somewhere between 150 and 163, and then attempt down to $1.27. So you've got a few different trading opportunities there, Stephen. And you've asked it on a long-term question. I've gone straight to medium term. I will have a look at this. Is it dead yet? Well, the fact is it's still got those old lows. It's into some support, and death would really be below $1. That would be pretty bad, below $1. At the moment, it ain't dead yet, but it's had the breakdown, retesting the old bottom, and you don't want to be long it, but you can have a dig at it, because if it rallies, you're back up to $2.24. Next question is GOR. And this is Gold Road. We can see it come back into, David, we did NNW for the PHG members today, and I'll just go back into my memory banks. We can see it's overstretched on here on Gold Road. So it's overstretched and it's broken through those old bottoms, which is fantastic. So we should be looking for 53 cents on the top side. The trick is, after this good move, is where can we put a stop? And probably the best place on a longer term basis, you haven't given me the time frame there, Ian, but I'll give you an investor's time frame. Stop is at 23 cents, stop close only. Dropping down onto the weekly charts, we see a bit of excitement today and a bit of a five-wave structure. So if you're long, I'd whack a stop in around about that 28 cents if you don't want to see it change. It could be that it just got overexcited last couple of days. Let's look on the dailies. We've seen it coming off on a bit of disturbing volume. And again, I reiterate that 28 cents or 27 cents stop close only below there, not so good. You want to see it starting to break up. If it does break above 34 cents, then your stop is at 30 cents on the looking for higher levels. Now, NNW, and I want to cheat a bit because I'm a little bit tired and try and find NNW here and what I said. And what I'll do is I'll find what I said and see if I'm consistent with what I said today. .asx. That was today. Okay, let's view this, and I'll then go to the chart. We'll do the chart first because I can't actually remember what I said. Sometimes, most of the time I can, but NNW I couldn't. Okay, NNW. At the moment, you could see that this probably has a correction down to around about the 50-cent mark. It's not that far away, really. 55 cents is actually the best target area. 55, yeah, that's right. It was 56 to 57 cents with a 55 cents being a possibility with a stop below 53 cents. We can see volume is increasing on this weekly chart, and so this is a place to have a go, but don't necessarily be too upset if it falls apart. So you can have a nibble. A nice target would be at $1 eventually. That would be fantastic. I know you probably enjoy that. A bit of destruction on the downside today, landing into this zone. If it fails that below that 54 cents, looking at 46 cents on the downside. Now, this is highly likely to be, David, yes, that's what I'm looking for here. This is why we're taking a trade there on ABC. Fourth wave. The problem with this is the volume, And so you might be better off, if you don't want to stand there and just get stuff chucked on you and your bids, is to buy a break back up through 62 cents with a stop loss below 54 cents. Your first target 67 cents and then towards 70 cents. Now let's see what I said this morning, because this was, yeah, that's right. Eugene asked the question, and he says, I hate it when they do a capital raising. It's come back down here because of capital raising. Nibbled on some at 66 cents with a stop below 57 cents. They did a capital raise with the institution 55 cents. So I'm not surprised that it's got down to 55 cents. And he asked me this, what time this, it was 13:55. He asked me earlier today, but I answered it. And can I buy more with its tight stop or exit gracefully? I said target downside is actually 55 to 57 cents. It's okay to buy more with a 53 cent stop. I guess the executives need to get paid sometimes, so they get their capital raise. So NNW, good question there, David. Now, next one we're going to look at is OZL. And I haven't done OZL for a while, so let's look at that now. And Oz Minerals. We can see Oz Minerals. I want to see some volume here. Oz Minerals, volume's sort of been okay, but rally has not been awesome. Needs a close above $4.90 to be very good in the long run. On the weekly charts, we can see the market's really not sure what to do with itself as well. On the weekly charts, we see the trend is up, which is nice. So if you're trying to participate in a long move, stop is at $4.37 with the dream target at $5.96. If you would like a tighter stop loss, you can see that it's come back into support. You can have a go on a break up, or you can buy it on a break above $4.66 with a stop below $4.52. Yeah, Jenny, for upgrading to the Profit Hunters group, have a look at that cart or call tomorrow, and we can arrange that for you. So you want gold? So okay, we'll do the interview on that for you. We'll organise that. Now, no more questions. We've been going for 2 hours now. I'm sure you're all sick of my own voice. And $4.65, a break above there would be handy. Nice to see some volume. Target at $4.93. So okay to go on this one on a investor's time frame, intermediate time frame, and monthly time frame. Hoping for a little bit higher up, with a reasonable probability of $4.77. Oh, we do a lot of FX trading, John. If you want to, I showed you the dollar index trades. We do a fair amount of. They tend to be trades that last between 3 days and 4 weeks, really. So we trade a whole bunch of different currencies as well. Cross pair, Aussie dollar crosses, Euro GBP. Do trades in that occasionally. Dollar yen, dollar mark, a dollar Swiss, euro, Kiwi. We had a fantastic trade on the Kiwi. that's been a real bottle of that one. Where are we? Kiwi. We got short up here at. Where are we? Kiwi. We got short up here at. Just on this break back down here at 87.70. We've been short all the way. We've just been trailing our stop, and it's now 84.93. We believe that this is, when you're on a good trade, you don't want to lose it. And this is the dollar index. We bought in the US dollar index down here at 79.84, just over here on the day of this low. We just missed the low by 7 pips, and we've been holding it on. We've taken a little bit of profit, but generally we're still raising our stops on that one. So we do a fair bit of Forex. So SIR, and you'd need to talk to me directly about that, John, because that's a separate package. If you want FX only, we divide it up into FX only for you. And SIR, Sirius. Now, SIR has had a strange life when you look at the chart. Now, the first time that it started like that, terrible. I don't know why it's done that. Some of the brain stress may reiterate that. It's overbought on the top side, but triangling. So a break above $4.06 would be a good buy with a stop below $3.72, targeting towards $4.50. So trends still up, but it is overbought. On Sirius, on a shorter time frame, again I reiterate that buy. You could even buy above $4, targeting $4.33. Currently, if you're long, have your stop at $3.82. And Malcolm, I like the way you said please in your request for PLS. That's good. You've done well. Pilbara Mining. Pilbara is doing nice stuff. I haven't looked at this for how many years? Hasn't been on the radar for most people. Nice long basing formation. Trouble is it's just head-butted something, so it's possibly got 0.3% on the downside. To protect yourself against that circumstance, have your stop at 1.9 cents. In terms of monthly charts, we're seeing, I just want to grab something else here. You really want to buy it on a breakthrough 3.5 cents. If it can do that, then you start to see a change in personality. Unfortunately, the pattern, it's come and had a good rally, and the trending indicators are somewhat okay. Volume's okay. Just be cautious about it. If it does break that 3.5 cents, you're looking at 5.3 cents just to transpose the numbers. And again here, a little bit disturbing what it's done there. Yeah, if you feel like being long and you are long, have a stop at 2.1 cents. And trading, and it's not really as regular it could be. Shorter term, if you bought a break above 3 cents, you'd be targeting 3.7 cents, and if you did that, your stop would be 2.6 cents. Now, Don's asked a structural question, which I tend to like to answer during the forecasting webinars. Do I expect the ASX and the Dow to go lower in this correction? And I've been saying that what we're doing is we're tightening our stop losses because we don't know how far it can go. Now, I've done the forecasting ones. If you want the recordings on that, we can get you that. No problem. They're available. You can order them. But there's some bigger targets down at 16,000 that I've been giving, and 16,000 at 158. The stops are tight on our shorts right now on the Dow. The trouble is the Dow transports are showing signs of continued weakness. I am looking to sell rallies on the next move up, if and when it comes, which it will come. Is it the end of the world now? The trend's down. So we got to go, okay, trend's down. Let's simply change it, move our stop losses. We are short from beautiful levels at 1960. We're short from the XJO at 56.32, and we're just hanging on to those trades and just trying to manage it so that we don't blow ourselves up. So answer is, I'm happy to be short. We're in a really good position, and there's not much else to think about. I did give a target down at 5,200 for the ASX at the moment. This is quite an impulsive move, and also it's blowing away the old tops. And so when we see that, you can't get too bullish. You certainly cause some problems below 54.60, 5,200, 5,300 is possible. Okay, so we got any keen on a gold membership, we'll do the interview tomorrow. I know you've been in the newsletter for a couple of months, and I'd like to thank you all for coming along. And if you've got any feedback, that's fantastic. Tell me what I should do better, and hopefully you've learnt something. And like I say, I want to see what the gold share price is doing at the moment. And what's this one? This is lumber. Forget about lumber. It's something of interest only for PHG members. We can see gold has backed off a little bit, but it backed off and it started charging up again. We're getting good volume on gold, so 1350 or 1400, that sort of area is the targets on there. 1307. Thanks, Andrew. Thanks, Malcolm. Thanks, David. Thanks, everybody, and have a good night. And for the PHG members, this will be up on the PHG site for a listen. Thanks, Shan. Excellent. Have a good one, everybody. And hopefully I can see here.